you to Vandergraaf for sponsoring this month's edition of Road to Recovery. Visit their website for more information about the Vandergraaf drum motor designed specifically for heavy industry applications.
Kevin Yannick here again with Pit and Quarry Magazine. Pleased to be joined by my friend David Chereb of SC Market Analytics. David, thanks for being here once again with us today.
Glad to be here.
David, we have your latest column on pitandquarry.com. We're going to be publishing that in our August edition here soon for our magazine readers. But you touched on a number of different areas, including the oil market, which has been kind of up and down in 2020. And it's been a heck of a story for oil, where we saw some negative prices at one point, but it seems like oil is rebounding. And if you're an aggregate producer with some interest in some projects tied into the energy sector, it seems like the sky's getting a little bit brighter for you. So I'm curious, what is it you see right now in terms of opportunity for producers who have interest in the energy sector? And are there any opportunities that you see coming down the pike in terms of alternative energies, wind, solar, David?
Well, you're right. The oil market has come back after taking a big crush for a while. In fact, all of 2020 so far has been dismal except for the last month or so. And so for those aggregate producers in the energy states, I think they're going to do okay. One thing I would say, because oil prices are coming back, is if you have to hang on and be prepared for the volatility. But I suspect that you're in the energy areas, you already know about volatility. You have to hang on because it's a wild ride. And with oil prices at approximately 40 and possibly going higher, those low-cost fracking areas like the Permian Basin should do fairly well. Other areas are going to come on board as we start inching up to the $45 range where they can make some money. They'll uncap some wells and start drilling some new wells. So the energy rebound is with us, and I think it will continue as we reopen the economy. It's not a boom, but it will be much better than the last 6 months. As for alternative energy, Texas is in a good spot. It's a leading alternative energy state with a tremendous amount of wind power. As we move forward, we've got a choice here. If we continue with the current administration, we'll get modest support for alternative energy. If we switch administrations, we'll probably get tremendous support for alternative energy. So there is a different outlook depending on what happens in November. In both cases, though, the energy areas are generally going to do fairly well, not that well if we change administrations and change dramatic policies. And the alternative energy will keep going. And as long as people are willing to pay, it's going to be expensive and intermittent, and lots of battery backup storage or other kinds of storage facilities for energy at night, they'll do okay. Just be prepared for expensive energy the more we go to renewables.
We'll keep an eye on that fork in the road that's coming up in November, David, and we'll see what comes beyond that. But yeah, I think you're right on in terms of where each road will lead if you're in the oil market or a producer with big interest in the energy sector. So, David, appreciate you joining us once again. Again, look for David's work on pitandquarry.com and Pit and Quarry Magazine.
Thank you to Vandergraaf for sponsoring this month's edition of Road to Recovery. Visit their website for more information about the Vandergraaf drum motor designed specifically for heavy industry applications.